Hey guys, welcome back to another update of my own personal Robinhood stock portfolio. And naturally, it's a little bit easier to give these updates when the market is green and the portfolio is at or near its all-time high. So I just thought that now is a good time to update you guys on the portfolio. And we can see right now that we're really close to that first big milestone of $100,000 in the portfolio. That's always kind of like the first big goal for investors, is getting to that six-figure amount in your own portfolio. So right now the account is valued at just under $87,000, but obviously we can't predict what's going to happen in the short term for stocks. We saw a lot of red yesterday, bringing the portfolio down 1.5% in one day, which is quite a lot. And the market could definitely drop another 10 or 15% in the short term, bringing the value down to 80,000 or even in the 70,000s. But either way, we are really close to that $100,000 milestone, so make sure to subscribe if you want to continue seeing updates of this portfolio. So taking a look at the account, for those of you who are new, this is a long-term growth portfolio with a good mix of dividend stocks and ETFs. I do also carry a little bit of margin here and there for trades when I find stocks that are fairly undervalued, but it's nothing too extreme, so for the most part, it is just a long-term buy and hold strategy. And this year so far, the portfolio is up 11% year to date, so it's been doing decently well. So jumping into the holdings, the first one is Microsoft, which is still right around 19.5% of the portfolio. So definitely the largest holding. And the stock itself has actually done really well this year. It's up about 13% year to date, performing a lot better than Apple has this year, which is my second largest holding in the portfolio at 16% in terms of weight. And like I said, especially compared to other software companies, Apple has not been doing super well this year. In fact, it's been losing value, down about 6% year to date. But as of recently, it's starting to kind of recover and gain back some of that value. So hopefully going forward, we can start seeing some more positive returns and consistent gains. It's definitely been kind of a controversial stock recently. Some people think that it's done growing and scaling and that it's had its run over the past decade. But then there are others like myself who believe that it does still have some room to grow. It's still a very profitable company that continues to produce a ton of cash with a really wide economic moat. So I'm still planning on holding Apple for at least the next couple of years. The next one is Broadcom, which is one of the largest semiconductor suppliers in the world. Just another really profitable company that's of course seen a lot of success in 2023 and now in 2024 with AI kind of taking over. So it's definitely been riding that AI wave, but I still think it's a great company to hold long term. And Broadcom is about 7% of the portfolio with a 31% total return. Cadence Design Systems is another semiconductor company. It focuses more on the design side of it. It specializes in what's called electronic design automation, or EDA. And this stock currently makes up about 6.5% of the portfolio with a 27% return. The next one is basically the exact same type of company. It's called Synopsys, which is actually a direct competitor of Cadence Design. So I just thought I'd own both. And this stock makes up about 5% with a 15% return, or about $700. Next, we have Costco, which is one of the largest retailers in the world with kind of a monopoly-like structure. Just a really powerful company and a store that I personally enjoy shopping at as well. Right now, Costco is 4.63% of the portfolio with a 43% return, or about $1,600. Next, we have Google, which has been doing awesome this month. It's up about 12% as it's been doing a little bit better in competing in this whole AI battle among all the other tech companies. So it's been doing really well this year, bringing my total return up to 19% and keeping it around 3% of the portfolio. The next two are both really classic, just rock solid companies. Cintas at 3% of the portfolio and a 46% return. And Arthur J. Gallagher, an insurance company, just under 3% weighting and a 12% return. These are two just great long-term, high-quality companies that all slowly, over time, keep adding more to their positions. Now we have Petrobras, which is definitely a dividend income only position. I've been holding this stock for about 18 months now, and I've been paid a little over $2,000 just in dividends from holding this stock. And right now it's near its 5-year high in terms of just the stock price. So I haven't really been buying too many shares recently, but as it falls back down near my average cost is when I'll start scooping up more shares. So I was a little bit late to the Nvidia party. I started buying in late 2023, so it is a fairly new position to the portfolio, and I'm of course kicking myself because I wish I would have bought a year ago or 18 months ago, so that 45% return would have instead been 150 or 200% return. But even though I am a little late to the party, I still have a decent average cost of around $600, giving it a 45% return, which I can't complain too much about. And it's definitely been cooling off a little bit recently. As you can see, it fell yesterday, 3%. So if the stock price keeps falling 10 or 15%, I'll definitely be adding a little bit more to this position. So like I always say, guys, I have about 50 different holdings in this portfolio, so it would probably take an hour or so to go through all of them. And a lot of these towards the bottom are less than 2% or even less than 1% of the portfolio. And because of that, they're not going to necessarily move the needle as much as some of the bigger holdings in the portfolio that we just went over. And then a lot of these as well, I'm either planning on selling or I've already sold a few shares of, which makes them drop down the list a little bit. And then a few of these down here as well are some that I've recently added to the portfolio, and I'm planning on increasing the position size over time through dollar cost averaging. So if any of these specific positions kind of stick out to you, or you have questions or concerns about them, just let me know in the comments below what you think, and I'd love to have a discussion there. Just don't be too mean because I do have feelings too. As always, guys, thanks for tuning in, and I'll see you next time.